Time now for our weekly market monitor, who has 3 picks that he says are helping to drive the U.S. economy. This is his first time on our program. Jordan Waxman is managing partner at HSW Advisors at Hightower. Jordan, good to see you. Thanks for joining us tonight.
Good to see you again, Bill. How are you?
Now, you're looking at 3 categories here that you feel drive the economy, and let's go through them here. First of all, the area of credit, and you've chosen a company, Carlyle's Business Development Corp. Why credit?
You know, most of the economy in the United States is small and medium-sized businesses. They need access to capital. It's an underbanked part of the market. If you want to play the larger credit picture, the banks are a place to go. But if you're a small or medium-sized business, you have to borrow. From some source, and funds like Carlyle's fund or Goldman Sachs has a fund. These business development corps are essentially pools of loans to small and medium-sized businesses.
And like a lot of banks and financially oriented companies, presumably as rates go higher, they benefit. Is that the idea?
Well, all of the loans that Carlyle issues are floating rate loans. So as short-term rates go up, they pay more interest.
Yeah.
However, since tax rates have gone down for corporations, now's a great time to be lending because the credit metrics have been stronger. The ability to pay back loans has been stronger. So companies that have $5 to, say, $25 million of EBITDA that need to tap the markets, they need to go somewhere.
So that's Carlyle's Business Development Corp. Another area you see growth, energy infrastructure. We keep hearing about the infrastructure plans of the government. You chose Enterprise Products. Tell us about it.
Well, think about what's really been going on in the United States, which is that it's gone from being a net importer of energy to a net exporter of energy. Energy Partners has assets in some of the most attractive basins for oil, natural gas, and natural gas liquids in the United States, and they're getting demand for all of those products from chemical companies, from utilities that are changing to natural gas, and from the export market, where finally the United States is exporting all 3 of those products and all of the ethane and butane and all the sub-products as well. Enterprise Products is very well managed. The group, Master Limited Partnerships, of which this is a part, is hated, and you're getting a 6.5% yield with 2 or 3% growth. Great management team, clean balance sheet, very, very good way to enter that market.
Finally, your third area of growth for the economy, innovations, broad category, and you picked a big one. Alphabet.
Well, think about it, right? Most clients who can invest in venture capital funds have to be very, very wealthy to get in. Most of them they're closed to new money. It's tough to get access to robotics and medical devices and financial services technologies, a portfolio of venture investments. This is a way to get in where you're paying basically 25 times earnings for a company with $30 billion of free cash flow that's making investments in every aspect of technology. They've made over 200 acquisitions in the past 15 years. They're repatriating over $100 billion of cash. This is going to be a way to tap the innovation in the market for the next decade or more.
All right. Very interesting. Jordan Waxman of HSW Advisors at Hightower. Thanks for joining us tonight, Jordan.
Thank you, Bill.